What's going on, guys? Dakota again. We are back with another video, and today we're going to be going over lesson 3, boxing and price, part 2. All right. So basically, what you already know, we've done 3 behaviors of the market: impulse, correction, continuation. Right, which tells us this is the move that we're looking for, and that's ultimately what our primary goal is when we're doing this technical analysis. Now, previous lesson that we just did, boxing and price with trend lines, or boxing and price part 1, where we broke down how to essentially box price in or box the corrections in so that you can get the overall direction of the market or understand the next move the market is most likely going to make. All right, today's part 2 of that, which is going to be boxing in price with horizontal lines, or finding our supply and demand zones. I often call these lines or areas our supply and demand zones. And one important note that I want to make is that every line that we draw on a chart, whether it's a trend line, whether it's a horizontal line, no matter what it is that we draw on a chart, it's a zone. It's not specifically a line. It's not specifically a price point. There's an entire area that line is encompassing. So we're not saying price is going to come exactly here and then completely turn around or whatever like that, right? Price is going to get in that general area, and we're going to look for it to respect it, or break through that certain area. But we're going to go over that right now. Let me change the color. So we already know that the 3 most important time frames are our monthly, our daily, and our weekly. Our monthly, weekly, daily. All right. So, in order to box pricing with the horizontal lines, we're gonna first talk about. We're gonna first go to our monthly time frame, and what we're gonna do is find our supply and demand zones. Now, what supply and demand zone or supply and demand basically is? Supply is when there's a lot of sellers in the market, or basically, and this is basic like economics. Basically, if you have a lot of a product, let's say you're a farmer, you have a lot of bread, right? And you just have a lot to sell. You have more than what you need to sell. You're just going to be selling as much as possible. You're going to keep selling to everybody. Anyone that will buy it, you'll sell, because you have an oversupply, right? Now, demand is just the opposite of that. When there's not really enough supply, you don't really have a lot of bread this season, but everyone wants it, so everyone's trying to buy it. Okay, so in the market, what that is, or what that does to the market, when there's a supply zone, the market shoots down very heavily, right? Because people are selling. There are a lot of sellers in the market. In a demand zone, everyone's buying. There are a lot of buyers in the market. So supply zone is going to be up top. Our demand zone is going to be at the bottom, just so you know for future reference, or if I even reference that in this recording. I know you'll often hear me say that on the live streams or the calls that I do. But let's go ahead and get into this. So supply and demand, we're going to start on the monthly. And first thing we're going to do is find a top and a bottom area of recent price. Okay, so just like I said, we're going to be finding a supply and we're going to be finding a demand zone in recent price. We're not worried about what happened all the way back here. We're focusing on what's happened recently. So we see prices right here. So what areas around this can we find a top and a bottom? Okay, so we're looking for a major move. So first thing we're going to do, we're going to come over here and click on our horizontal line, and we're going to find our bottom, right? Our bottom, or our demand zone. So I'm going to put a line right there for our demand zone. And you guys know I like to keep my chart simple. I just have a simple black line. If you do want to change these colors, it's completely up to you. Colors don't really matter. What matters is as long as you understand what those lines mean and how to use them, how to utilize them when it comes time to take action. All right, so go ahead and find the bottom. We can see prices come down here several times and reject it and gone up each time it's hit it. Okay, and I base these off of the candle, not the wick. All right, at least these supply and demand zones, I don't really base them off the wick. I base it off the candle. Whatever time frame I'm on, I'm basing it off the candle on that time frame. I do not change it as I go down to lower time frames. Now, after I've set that line there, after my demand zone is here, I double click it. Then we're going to go to coordinates. And in coordinates, we're going to round to the nearest thousandths place. Okay, we're going to round to the nearest thousandths place. For those that don't know what the thousandths place is, it's tenths, hundredths, thousandths place. Okay, that's the third number after the decimal. Okay, we can see these two numbers here, 86. That means we're going to round this up because it's above 50. So we do 1, 0, 0. After we round this number up, we're going to copy this number. We're going to go to text. And since we're on the monthly time frame, we're going to type monthly. Okay, you can see my font is 10. I have it as black if you want to copy me exactly, and my text alignment is top and to the right. After I type monthly, I hit space and I go ahead and paste that number that I just changed in coordinates. Then I hit OK. All right, we're going to do that several times, so if you didn't catch it that time, you're definitely going to catch it over the next few times that we do this. But after that, you're going to click on that line and you're going to lock it in place because we don't want that line to move. We don't want to accidentally move it when we go to lower time frames. We want to make sure that stays there the entire time, right? So basically nothing messes that up. So we lock in price there. Then we're going to look for the most recent top here. All right. So grab our horizontal line again. We go to the top up here. You can see price respected one time and it shot all the way down. So that makes it a supply zone. All right. A lot of sellers there. We can see previously price actually respected it, popped up, respected, popped up, respected, popped up. Okay. Now, at the time that price was actually popping up off of it, like rejecting and going up, this was a demand zone. When price was above it, it was a demand zone. But now that price has come to it and shot down from that line, it is our supply zone. So if you studied support and resistance, it has that nature of it. All right. So there we go. And then again, what we do, we double click the line. We go to coordinates. We round to the nearest thousandths place, and we can see this is the last two numbers are 93, so we're going to round this number up. So we're going to round it to 200. Copy this number. If you don't know how to copy, it's Control C. Then we're going to go here, type in monthly because we are still on the monthly time frame. Hit space and paste that number there. Okay. Last thing we do, we click the line and we go ahead and lock it in place so we don't accidentally move it in the future. All right, that's great. We got all that there. Now what we want to do after we have both our top and our bottom, our supply and our demand zone, what we want to do, we want to have 3 monthly lines. On every chart that we do, we want to have 3 monthly lines. The reason we want to have 3 monthly lines is because it creates 2 windows, which I'll show you guys in a second. It creates 2 windows. So I'll break it down further after I draw it. So in order for us to have 3 lines here, instead of just finding a random area where price has rejected several times, we're going to do something over here. We're going to go ahead and go to this section where it says Gann and Fibonacci tools. We're going to go to the Fibonacci retracement. Take the Fibonacci retracement, click once at the top line, right on the top line, as close as perfect as you can get it. And then we're going to click again on the bottom monthly line. All right, we're going to click once on the supply zone. We're going to click the second time on the demand zone. Okay, after that, we're going to take our horizontal line. We're going to put it right on the 50 or as close as you can get it. Okay, and then we're just going to delete the Fibonacci's because we don't need that anymore. After we do that, again, we're just going to repeat what we did with the rest of the monthly lines. Double click it, make sure the coordinates are rounded to the nearest thousandths place, and here we see these last 2 numbers are 80, so we have to round this up to 7. So it'll be 700. Go ahead and copy that, and we're going to put monthly because we are still on the monthly time frame. And we're going to lock it in place. Remember, lock it in place. That's a very important thing. You do not want to accidentally move this when you come back to the chart and it's messed up. Might be looking at the wrong setup. So these are the two windows. We can see price reacts between these two lines. This is a window, and if price comes down, breaks this level here, comes down, price will be reacting within these two lines. So we already know that price acts as a magnet to each one of these lines. If price comes down to this area, we're looking for price to shoot up. If price comes up to this monthly level, we're looking for price to shoot down. Now if price comes down all the way to this level, we're looking for price to shoot up. If price comes up to this level, we're looking for price to shoot down. So that's what these two windows really mean to us, and that's how we want to pay attention to it. That's the valuable information that it gives us. The next thing that we're going to do after we have all this done, we're going to go ahead and take our rectangles on the left side right here, and this section is called geometric shapes. Click rectangle, and you're going to draw a skinny rectangle, as skinny as possible, right? As skinny as possible. And this is just to remind you that it's an area, it's an actual zone, not just a line, right? Now I do like to extend these all the way to the right and all the way to the left so that it encompasses the entire chart, each of the zones that I draw here. But again, this is your personal preference. You don't necessarily have to do this, as long as it covers the area and shows you that it's a zone. You're perfectly fine. I'm going to do it again for this last time. All right. Okay. And make sure you put a negative sign in front of at least one of these numbers so it extends all the way to the right and all the way to the left. And I do also like to lock these zones in so they do not move if I go to a lower time frame and accidentally move it. Okay, so that's the monthly. We have our 3 lines on the monthly. That was our goal. Accomplished. We passed it. Now, next thing we're going to do after we have these 3 lines and 3 zones and we've labeled our monthly levels, our monthly supply and demand zones, I'm going to go down to the weekly. Now on the weekly, next thing we're going to do, instead of finding an area where price is rejected several times, we're simply going to take our Fibonacci's immediately and put it on the top monthly level and bring it down to the middle monthly level, this middle monthly level that we just made, right? After we do that, we go ahead and take our horizontal ray and drop it as close to that 50 as we possibly can, and we go ahead and edit it. All right, edit it like we did our monthly, round to the nearest thousands place. Now this is below 50, so we're gonna round down to 400 right there, right? Copy that. And instead of putting monthly here, we're going to put weekly, since we did this on the weekly time frame. And paste that number there. And do not forget to lock it in place. And we do the same thing for the bottom window down here. Take it from the top monthly level, or the mid monthly level, my apologies. We take it from the mid monthly level, and we bring it all the way down to the bottom monthly level. We'll go ahead and put our horizontal line right there on the 50. Delete our fibs. Double click the line and make sure it is rounded properly. And this one we just round down to 800. Copy that number. Remember to label it weekly. Paste that number and we're good. Don't forget to lock it. And after that we go ahead and put these zones here. Alright, so basically a rinse and repeat from the monthly, at least the second part of the monthly level. Alright. And we used to do this a different way. For those of you that have been me for a long time, you guys already know the other way that you can draw these supply and demand zones. The reason I prefer this way, again, I did get a new mentor and learned this and took bits and pieces from several mentors that I've had and developed this plan that I teach you guys. But the reason I like this better is because it simplifies it and doesn't have you scrolling back every time, right? You don't have to scroll back. You don't have to find an area, and then some people may disagree about certain areas, and it gets rid of that extra explanation as to why you drew that supply or demand zone opposed to another one when you're explaining to someone else, and it's a whole lot more straightforward. Okay. So again, make sure those zones are locked so we don't move them on a lower time frame. And boom, that's our weekly time frame done. That's our supply and demand zones done for our weekly time frame. Now, before I continue, as you can see, we're boxing in price pretty well. If price hits this weekly line, we're looking for it to come down to this monthly. If price hits this monthly, we're looking for it to go back up to our weekly. If price breaks through that weekly, we're looking for it to go up to our monthly. If price hits that monthly, we're looking for it to go down to our weekly. Right? Pretty straightforward. And if you guys do have any questions about this, just go ahead and message me. I can go ahead and break this down. If you message in the student chat, so everyone can see the answer, just in case anyone else may have the same question that you have. All right. But this is boxing in price with those horizontal lines. And again, I do call these supply and demand zones. So if we ever have a personal call, you will hear me say, okay, this is this weekly supply zone or this monthly demand zone. Look for price to bounce off of it. Something like that. So just get used to saying that or understanding what those levels are. Now, after we finish our weekly, the last time frame we do this on is our daily. Okay. Now, instead of drawing 1, 2, 3, 4 different daily, excuse me, instead of drawing 4 different daily zones or lines, what we're going to do is simply take the area or the window that price is currently in, and this is the only daily line that we're going to have on our chart. Okay, we're going to take our fibs, top of this weekly, bottom of this monthly. We're going to go ahead and draw a horizontal line here. Double click it, make sure everything's changed correctly. We see we have to round that up. Copy it, label it daily, and paste that. Okay. Now, for those of you that want to be quick with this, here's a little tip, and you can do this for all of them. If you come down to this template area, you can save as. So if we have daily here, we can go ahead and save this as. I already have one saved, so I'm going to label it daily 1. Hit OK. And I'm going to go ahead and delete this and draw a new line right on that 50. And then I'm going to double click it. And instead of typing all that stuff in, first I'm going to change this, make sure it's copied correctly. Come here and I'm going to change this to daily 1. And it pops up daily, so I don't have to type daily every time. And I can just paste the number and be done with it. After that, make sure you lock it. Delete the fibs. All right, and draw your zone. All right, and as you can see, once I click this, if it allows me to, here you go. As you can see, once I click this, like I have multiple ones where it says weekly, monthly, daily, so I don't have to type that every time, and you can do the same thing there. Let's make sure that was right, because it looked like, yep, perfect. So that is how you box and price with your horizontal lines. That's how you draw your supply and demand zones. Okay, now you are going to use this with your impulse correction. You are going to use this with boxing and price, with those trend lines and everything, right? And it's going to help you determine, what we're doing here is determining the overall direction of the market. So if you look back to the previous lesson that we just finished, you remember that we drew this as a correction. We're seeing this as a correction here. And I referenced that we're looking for price to come down to this area. Okay? We're looking for this correction to come down to this monthly level, and then we're looking for it to push up, because overall, the big picture, this whole thing is an impulse, this whole thing is a correction that's forming. And let me go ahead and draw it for those that may be struggling seeing it. Looking for this correction to form, and then we're looking for it to continue up and possibly push past this weekly and go all the way up to that monthly. All right. That is the move we're looking for. I believe I have an entire video on this full breakdown, actually public on the YouTube channel, so if you want to go ahead and check it out, you can go there. Now that we did this weekly, we'll go down to our daily boxing in price with our trend lines. We can see over here, okay, this is our correction, this is our pattern, so we're looking for price to come down further. That falls in line with everything that we drew. We see prices broken this daily, so now that price is below this daily, we're looking for price to come to this monthly. Okay, we may see a small correction here. If there we go, we may see a small correction here, and then may see this drop. Okay, that's something potentially to look for. Drop all the way down to that monthly, and then look for it to turn around. But that is lesson 3, guys. And this is not something that you're going to do every time you come to the chart. What you're going to do, you're going to want to do this before the month or before the week begins, because these levels are rarely going to change. They're rarely going to change. So if you mark up every week, do this over the weekend every week so you can have your markup set up properly, or do this at the beginning of each month if you're more of a swing trader. All right, but you're going to want to be doing this regularly so you can keep up with marking up the chart, so you don't basically lose that skill, right? You don't want to lose what is a vital part of your strategy. Now, to practice this, the homework is basically to mark up 25 charts like this. All right, pick 25 different pairs. That can be absolutely anything. Now, this will work best on forex pairs, but you can do it with gold. Gold is a little bit different because it has new highs, which a lot of forex pairs don't really have new highs, at least at the moment. But you can still mark up the chart like this. If you have any questions, go ahead and message me, and I'll go ahead and catch you guys later.